Cool, what's going on today, guys? I'm just going to go over my trade on EA I caught this morning. Again, another top down, similar to the gold trade. What we're going to look at the moment is we've got the daily time frame currently up at the moment. There's not really any inefficiencies to the downside to obviously buy it long in the discount unless we come down into this region here, which is quite a way away. Obviously, we've left imbalances and we are extremely bearish. Like we've had basically a full-on meltdown post lockdowns for COVID on EA. So obviously the euro has significantly got weaker and the Australian dollar's sort of stronger. But yeah, obviously going into this trade, if I jump down to the 4 hour, what I can show you guys about current PA right now. So I had this, I think it was actually a 2 hour. Obviously, just quickly, we can obviously see we're in a complete bullish trend, making higher highs, higher lows, so on and so on. And the thing I want to highlight to you is, like we always say, the lateral movement comes in, okay? As soon as we see this, and it appears to be ranging, an accumulation or a distribution is happening. As simple as that. Okay, one of the two is happening. It's not just literally just ranging for no reason. It's to liquidate the impatient and waiting for smart money to come into the system, come into the market, and implement what they want to achieve, either drive the price higher or drive the price lower. Okay. What I was foreseeing though, if we go down to a 2 hour, I'm just going to get rid of this. I actually had this distribution set up. I've had it for it seems 80 now, a good couple of weeks. We go back, 24th of May. This was all playing out. And one thing what really caught my eye, which from my experience, this is really similar to the gold trade, to be fair, but we had the meltdown after the EURAUD. And there wasn't really any tests of that. I mean, you could argue on an intricate level, this could have been a breaker structure on like M1, M5 and the tests here, and also here as well. But even though we've broken down here, and many would consider it bearish, which technically it has broken to a bearish structure on the 2 hour. However, we know that if the distribution was to fulfill, it needs to create a shoulder, which is the last point of supply, right? To then obviously resell it into our buying discount, which is the whole thesis. It is a sell to buy for me personally on Euro Australian dollar. Now, a confidence for that is that we have left imbalances, okay? And I've actually got a H8. I'm going to show you guys. I've got a H8 point of interest, okay? Now, it's obviously a little bit of a weird time frame, right? It's not used to what the generic trader uses, the 1 hour, 2 hour, 4 hour, so on. Okay, 8 hours a little bit out there, but again, price doesn't know any time frames. It knows no difference. So that's something we have to bear in mind, okay? Like literally the market prints what it wants to print, and it's up to you how you react to the situation of it, okay? But one thing I want to bear in mind as well, okay? If we go to H4, a lot of people are going to be taking this candle here, yeah? Even if we go to H8, a lot of people are going to be taking this candle here as a last point of interest. So some of you watching this may be thinking, why am I taking this candle? What's the reason why I'm taking this candle? Okay, because technically the order block is here and here, right? Now, the reason I'm taking this and why I like to do this only when it presents itself, because it's not always common, is I like to see, it's a bit more so on a higher time frame, I like to see the candle which basically it initiated the reaction of the move, okay? And it purged the liquidity, okay? Now, if we go to the 4 hour, the OB, what we generally would mark up, okay, would be here. But that OB hasn't taken any liquidity to the left, okay? It hasn't taken anything. It's just an imbalance in price. So it's a valid OB with breaker structure, okay? Go down to the 2 hour, exactly the same, okay? This would be our OB here. And arguably, up here as well, there's a slight imbalance between this wick and this wick. but it's a little bit unclear, right? So go to the 6 hour, okay? Same thing, the OB would technically be this, right? Whereas on the 8 hour, we have multiple green lights to use this 8 hour candle, okay? That is the candle, the institutional candle, what liquidated all of the early sellers. It initiated the move to create the new OB to then break the structure, okay? We've had a voided move. Yeah, it all comes into lines together, you know. So for me, I wanted to take this. Bear in mind as well, we're not taking a blind limit off of any of these candles, okay? Whether it's H4, H2, H8. This is literally solely a point of interest, okay? Now, I don't know about you guys, but I like to work with big areas of points of interest because I know that EA is going to have a reaction within this region. I know it's going to react. It's going to have some sort of reaction from here. Okay, just judging by the liquidity, session liquidity, so on, it's due a reaction from this point. Okay, so this is why I've chosen the H8 point of interest because I just want a bigger area to work within. All right, I'm obviously not selling here and having stops above here. None of that. It's literally just a point of interest, and hopefully we see a nice distribution, so on, so on. Okay, so this was my thesis over using the 4 hour. Okay, now going back to a 2 hour, obviously that lines up with a push higher, i.e. today's PA, what we have now seen, to obviously mitigate that H8 point of interest, which is this grey rectangle, which it now actually has, to literally to the pip so far. Okay, now granted, we've still got our H4 traditional OB imbalance. There's no reason why the price can't come above that. However, I feel like it's you know, the H8 is starting to get mitigated now, which is the main thing that we actually want to see, okay, in terms of the institutional candle. Now, again, what is a distribution's objective? To drive the price lower, okay? The whole of this is distributing orders and punishing early sellers, as well as enticing buyers, to people to go along, okay? Now, we know from the schematics, if anyone studied them, that granted the minor sign of weakness has been purged. However, all of this just for that purge. And it hasn't really tapped into anything either. I've checked on numerous timeframes, it hasn't really tapped into anything. So for me, the distribution has not been fulfilled yet, which gave me more confidence that a last point of supply or a retest of these order blocks are going to be in play to then drive price lower, actually take all of the liquidity remaining, as well as fulfill the distribution to then potentially buy it long, which would obviously be in our long thesis, would be in the discount region, right? As we're selling to buy. So that was my analogy behind this. But I actually got caught up within this range, and I actually went to long it up to my H8 point of interest, okay? Now, this is a little bit of a different trade I don't normally take, because what I traditionally like to do is set an alert at the bottom of this, set an alert at the top of this, walk away, no stress whatsoever. And I know the most higher probable trades is going to be when these alerts go off, okay? But sometimes the impatience can get the better of you. And we was ranging for ages and ages. And I was like, screw it, let me go into this and actually see what I can identify, you know? So on a higher time frame, we can obviously see this distribution. Now, if we go to an intraday level, okay, this is the trade what I call, okay? It's a combined 80 or potential of 80% risk to reward on this, okay, which is obviously like really good, like phenomenal stuff, yeah, really good. Obviously, we were risking 0.5%, 45%. In total, I actually bagged 29% in this trade after partially out, but still 29% on the trades. You know, really, really decent. It's good. I'm happy with it. Now, okay, going back to what we've got here, okay, I'll talk you through my analogy of what I was seeing. If we go to the hourly over here, I'm going to try and do as clean as possible. Okay, one thing what I noticed, okay, To many, this is going to be very, very messy PA, okay? We had that H1 breaker structure, okay, here. Now, what would we traditionally expect after obviously a higher high, right? Obviously a higher low, which we get here. Now, I actually had this 2-hour point of interest here, which never actually got tapped after this move. We never tapped, and we actually made relative equals. So in my head, I was thinking, okay, this is looking good for a long from this point of interest. This looks really good. And I was waiting for that, hence why I set an alert here. And I was waiting, thinking I was going to take liquidity, take these equal lows, create an accumulation schematic, get in, go long up to here. Brilliant, perfect. That's what I wanted to see. And we started breaking to the upside, okay? And we actually made discrete higher lows, and then we started making higher highs as well. And it was at this point here, I was like, it's not in price's best interest now to come all the way back here and fill everyone in, okay? This liquidity is going to be left for a later date, okay? Potentially from the short up the top. But we've made a higher high, we've now made a higher low, and then we're consistently making higher highs and higher lows, right? So it makes sense to continue a trend, yeah? Which is obviously what we're going to expect next, a higher high, right? So going down into this, obviously we've left this OB, right? But obviously this is a big point of interest. So I was like, okay, let me see if I can refine this move, okay? One thing I want you to notice as well, this is the volume in the moves, okay? This looks quite intentional. This looks quite correctional. Intentional, correctional. This definitely certainly looks intentional here, leaving a valid OB, right? So I've got this in my head as well as I'm going. And I believe I went down to M5 and I refined it to this point of interest here. Okay. Now, there isn't really any valid OBs and imbalances. I'd be taking. Some people would be like, "Oh, this is imbalanced." It is, but it never broke structure. This never technically broke structure. It led to a breaker structure, but it didn't directly. Like this candle wasn't responsible for the following movement breaking structure on the same time frame. So for me, it just held less weight. It may potentially be valid to some of you, but for me, it just held less weight. Whereas this M5, look at the reaction straight after this, okay? Okay, and also as well, a lot of people be like, well, what about all these here? These are all equal lows or relative equal lows. You're not wrong. I had that in my head as well. But at the end of the day, all we can do is react off of what price is telling us, okay? I had this all in my head before we was trading. So unless I saw an absolutely picture perfect entry drill, I wasn't going to trade it. It's as simple as that, because we did have these here, okay? Now, I went down to M5 and all I was doing obviously was just waiting for price to come into my POI. Let me just slow this down quickly. I don't want to go too quick. I'll try and do it as live as possible. Boom, there we go, right. We've entered our point of interest, okay? So now it's time to scale in, okay? So one thing I want to quickly say before we jump down to the lower time frames, okay, is Wyckoff is everywhere within the market, whether you think it or not, because we are currently, bear in mind this was this morning, which is along here, we are currently in a 4-hour distribution leg, yeah? Or 2-hour distribution leg, should I say. We're now in an M30, or what is going to be an M30 reaccumulation. This big rectangle here is M30 reaccumulation, which is going to take place to drive price higher, okay? And then within that M30 reaccumulation, now we scale in M1 accumulation, okay? It happens on all time frames, and it's constantly happening, all right? Because even though it might not, a trending market might be ranging, that might be a schematic within the daily, which is within the weekly, which is within the monthly, You know, Wyckoff is everywhere within the market. And we're coming to our M5 point of interest, right? Now, obviously, as we know, a type 2 schematic wouldn't have the spring, it would just have a secondary test phase B. So generically, what we would look to do then is, right, where's the M1 structure point, which is here, okay? As soon as we get a breaker structure to the upside, here, green lights enter. However, there's a clear M1 imbalance here. And the reason I felt really confident with this is actually this downward wick here on M1, okay? This really gave me confidence that if there was any liquidity here, more likely it's been purged. And the reason I say that is because the reaction afterwards was so impulsive that I'd almost bet that this did purge liquidity of some sort. It might not have gained all of it, but it's purged liquidity because the reaction off of that is very impulsive, right? So I'm scaling down to my M1, yeah? And I'm just waiting. I'm just waiting patiently for, obviously, the last point of call we're looking for is a spring, followed by a breaker structured to the upside or equal highs, okay? To show intent that price is ready to go up, okay? So when I saw this price action here, I was a little bit confused. I was like, what the hell is price wanting to do here? Like, it's trended quite bearish nicely. What's it doing? It's literally just wicking around. And then I was like, hold on, let me go down a time frame. Okay, and now I was saying about schematics, okay? All of this is going a H4 distribution or H2 distribution into an M30 reaccumulation, okay? Into an M1 schematic. And then look, we go down again to the 15 second, which is within this box with this schematic, okay? And then this really clears up the PA for me. This actually really clarified stuff, okay? Because what we can see now, okay, we've got our preliminary supply here. What are we looking for? Seller's climax, which is what we've just got, okay? Looking for an all-mac rally, which we've just got. Secondary test, what we've just got. Secondary test phase B, perfect, okay. So one thing we have to understand as well, okay, the reason within this 15-second schematic, I wasn't looking for a spring, okay, is because in this M5 order block, okay, within this M5 order block, the lowest place, what I expected price to come to was to mitigate this M1 candle here, okay? Because there's no reason for price to go any lower, okay? Because everything's mitigated. This is all healthy PA, okay? This is all healthy here. There's no reason for it to come any lower unless the whole analysis is invalid and wrong, okay? But if I'm thinking how I'm thinking that this is accumulation, there's no need to go any lower than this to mitigate this. So we've come down into this, okay? Now we've mitigated the M1, perfect, that's green light, okay? Now, I wasn't expecting a spring to form on here. Brilliant, TradingView is gonna decide to ruin this video, as always. Let me drop down here, there we go, lovely. Perfect, so I was just waiting, and then as you guys may notice, I had, okay, well, I need confirmation with this, okay? I wanted to see structure highs, okay? One structure high, two structure high. I wanted to see both of them purged to show intent that the market is ready to actually do what I think it wants to do, okay? If you notice as well, I didn't take this, but if you actually did take the 50% on the M1, literally to the pit, but that kind of would have been a blind limit. So I wouldn't recommend doing that. But again, we're just waiting for structure to break to the upside, yeah? Again, all of this is just messy PA. Granted, there's technically a 15-second OB, okay? But to me, it's a bit messy. It's just a little bit messy. I did have this marked up at the time, but as you can see in a second, price presented a real clean opportunity. Boom, there you go, yeah? So here, what's happened, okay? So this is basically the same thing which has happened on the higher time frames, just zoomed in. That's literally the same thing, okay? What has this candle done? It's led to a breaker structure or equal highs, okay? This has led to equal highs here. What do we know equal highs as? It's bullish intent, because now where does liquidity lie? To the upside or the downside? It lies up here, yeah? So we know prices needs to come up to purge that, okay? Also, what has this candle led to? The breaker structure. So it's led to two breaker structures as well as voids, okay? Now, if we did want to say, well, this leg started from down here to down here, down here to up here, sorry, and we fibbed it, where's our discount region? It's going to be within this region, yeah? This is about our halfway point here. So anything from here to here is our discount. So again, that's a green light to buy, okay? Granted, this is a 15-second time frame, so it's very fast and quick reactive thinking. However, everything is still completely valid. Everything I'm showing you guys, we do all of this, but just on higher time frames. The exact same thing is happening throughout all time frames, because Wyckoff is everywhere, all right? So I took my entries based on this candle here. And I know these stops look crazy and the entries look like, well, why the freaking hell have I entered there? It makes no sense. This is only a 2.8 stop, 2.8 pip stop. This is only like a 1.3 pip stop, okay? They just look huge because I'm on the 15 second. They're still ridiculously small stops, okay? Very aggressive trading this as well, by the way, okay? It's not necessarily recommended, but if you mastered the 1 minute and you want to start refining down, and this also gives you reason on the timing of the 1 minute schematic, okay? So this is why I've done this in 15 seconds. But the reason my entries are up here is literally just to allow for slippage, all right? Shout out to Kieran if you ever watch this, because I didn't want to get Kieran, basically. I don't always hard work. I was like, fuck this, I'm making sure I get into this trade, okay? So I actually had a 1 pip slippage on it, and then I also had one nice and tight, I believe, as well. I don't think I did. Hold on, let me go back. I don't think that's actually right, you know. I think I've accidentally moved this. 1 second, guys. Should have done this before the video. Apologies. Oh, was this right? Oh no, it is right. Oh no, it is right. Okay, cool. So we've come down. There we go. Okay, obviously that's the reason. So I had this candle here, right, as the OB, hence why we've got this gang box here. Okay, so that was it. Sorry, I was going off the wrong candle. That's why it confused me. So obviously within from here, we're looking at this candle here. Obviously coming up, I've allowed a 1.5 pip slippage. Okay, and the reason I allowed so much slippage, some people be like, why are you allowing 1.5 pips? That's like loads. We have to know the pairs what we're trading, right? If this was EU, I would have allowed maximum half a pip. Okay, EA has higher spreads. All right, normally you need to allow at least a pip on the spreads. But I already know, because I'm on such a low time frame, I know my stop loss is going to be so small that I can afford to give it that extra breathing room to make sure I get into the trade. Yeah, I knew a high risk to reward setup is presenting itself. Okay, so I allowed a 1.5 slippage here, and also I believe this was like 0.8. Yeah, about 0.8, which is generically, when I go on to my MT4, it's normally between 0.6 to 0.8, sometimes even 10, which will be obviously 1 pip. Okay, so that was basically my analogy of having the entries there. Obviously stops just below this, because everything here is balanced. Okay, granted, it could come all the way down to here, but where we led to all this breaker structure, we're in our discounted region, it's completely valid. And obviously we are aggressive trading, being honest, on the 15-second time frame. So I took the risk, I was happy with the analysis. We tapped in, mitigated this 15-second OB, mitigated again, and then massively expanded up, okay? Now, quickly to zoom out, targets, where are we targeting here, okay? Now, obviously that's gonna be just our everyday liquidity. Okay, that's all I'm targeting. Liquidity, and then the final TP is going to be a mitigation of a higher time frame. So my first TP was Asia highs, okay? The only reason I had, it didn't really actually hold that much weight. There was no equals or anything there, even though there's session liquidity. But how many times did we see London come up, take the Asia higher, and then reverse and melt all the way down? Obviously, I didn't want to take that risk. So I wanted to make sure that there was reasonable price off of this position by this point, okay? Secondly, these equal highs here. So we've got Asia highs plus equal highs, okay? This was my second TP. And then just above there, we also have the previous weekly high as well. So I knew within this region was going to be my main take profit region, okay? Because this is where the majority of liquidity, what I'm targeting is, okay? And the third TP, the TP runner, as I like to call it, is, like I just said, is all the way up at this H8 point of interest, okay, which is this box here. Okay, and then obviously, as we've seen, we've just expanded. So at this point, I have 25% off of my position at TP1, half of the remaining position off at TP2, and then the rest I'm just leaving, letting run. Obviously, I went break even at this TP here, not the first one, because technically where we're getting in so early, especially on the second time frame, we're leaving OBs to actually project off. Okay, so price technically could come down and mitigate again. So I'll break even at this point. I will come down a little, and then obviously going all the way up. Boom, TP hit. Okay, that's obviously current PA right now as well. Come out of replay mode. But going back into the close range, obviously, as you can see, I've got it labelled here. Combined 32 risk reward at this point. Combined 54 risk reward at this point, and combined 80 together, which is yeah, like a 1. I believe it's a 1 to 55, 1 to 55, and a 1 to 25. So yeah, phenomenal trade. And this is it. This was literally purely through Wyckoff and trading through ranges, all right? Because if you go to H1 and then bring it back to actually where I did enter, which was like here, and I've done this, so many people would be put off of this because they're like, what the fuck is price even doing? Like, what is it even doing? It's all over the place, okay? But with the analogy of looking at intricacies, we're making higher, 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 low, higher, higher. What do we expect? Higher, low, then what? Higher, higher. Okay, so following in line with the structure. Where does liquidity lie? We have these equals here. We have an imbalance here. Okay, there's reason. You could say, oh look, there's relative equals here, but look, we've had that spike down, taking the liquidity here and here. What's happened after that spike down? What's the reaction been after that? OB's been there, breaker structure to the upside. Yeah, or not an OB's been there if that's mitigated, but you get the point, yeah? So this is all going through my head, okay, whilst we're doing this. And then, like I said before, knowing where are we in the market, where are we in each leg on each time frame, okay? I know price needs to come up here to fulfill the H2 distribution, which is going to be our last point of supply, to then potentially roll over again, to come down, okay? But to do that, from down here, price needs to accumulate first of all, which has happened here, then reaccumulate, which is within here, within this big box. And then obviously coming down, we've had this big move. What do we expect on the correctional point, okay, to drive price higher and accumulation again? So on this correctional move, if we scale down low enough, an accumulation should form to then send price higher. As soon as we got that stalling movement, I went down again to clarify, are we accumulating? 15-second clear-cut accumulation, entered in the break structure. Simple as that. And then obviously we're targeting daily targets or intraday targets. So that is basically the breakdown of EA today. Just for bragging rights, someone could be wrong, but I do think we're going to come within this region of the H8 point of interest. If we do see a valid distribution schematic starting to form, on the lower time frame, which will go in line with the higher time frame rollover, I do foresee, you know, 156, 155, 800 being filled. And then in the long-term scope, give it a few weeks, potentially a month or two, and I think we might see definitely like 1.6, 1.60. Well, that's my long-term scope on the EA. I am bullish on it within the next couple of months. It's massively overextended to the downside on the weekly, so it's due a retracement up, which would take it to that 1.60 region. But yeah, guys, hope you enjoyed. I hope that helped, and you know, good luck on your trading, guys.